I get it. We all love analyzing charts, and you love learning new and profitable trading strategies. And I promise you that in this video, I'll be teaching you a rules-based trading strategy that's proven to be over 65% accurate since the beginning of 2021. But the first 6 minutes of this video will be just as or more important than any trading strategy you will ever learn. So please stick around for these first 6 minutes while I explain why technical analysis alone has never created a profitable trader and how you can incorporate technical analysis into your trading correctly in order to jumpstart your professional trading career. And of course, after that, I'll be teaching you a rules-based trading strategy that's proven to be over 65% accurate since the beginning of 2021. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new, and I'll see you after the intro and disclaimer. So one of the biggest traps that beginner traders tend to fall into, and one of the traps I fell into at the beginning of my trading career as well, focuses around technical analysis. At the beginning of my career, tell me if this sounds familiar, I thought that if I learned enough about technical analysis, I would become a profitable trader. Shit, I thought that if I learned enough about technical analysis, that I would know exactly what the market was going to do at any given time. That is just not the case. Technical analysis by itself is nearly useless until you do this one thing. Before I tell you about this one thing, let me give you an example of what I mean. You could give me a chart of any asset in the world, and I could give you 3 very convincing reasons to buy that asset. Or I could give you 3 very convincing reasons to sell it based on technical analysis. There is so much different parts to technical analysis. Indicators, candlestick patterns, structure, supply demand, smart money concepts, whatever it is. There is so much stuff out there based around technical analysis that you can make an excuse to trade in either direction at any time. So you could give me a chart of your choice, and again, I could tell you 3 reasons to buy and 3 reasons to sell. Both would be just as convincing. Let me give you an example of that. Here on the pound Swiss, we have a level of structure on the daily chart that's been tested multiple times that price is in right now. If I drop down to a 4-hour chart, we have a nice double bottom here that's just had a push higher after our double bottom. This could be a great reason to buy this market. And if we add on the fact that we've also seen the MACD line just cross, oh my gosh, this is like a great buying opportunity, right? Well, let's look at it from the other angle. What about we take this off and we go, okay, I'm on the 4-hour chart now, and looking left, if I just scroll back a bit, we have a level of structure that has been tested multiple times. We have a level here that's been hit, and now price is back into that level. If we look at the RSI indicator, we just went overbought and came out of it, and we just had 2 red candles. Oh shit. This way, I'm following along with the trend of the 4-hour, this downtrend we're in. This is a great trading opportunity to the downside. Do you see what I'm saying? You can make the excuse to buy or sell based on technical analysis at any time, and it can be very convincing either direction that you choose to go, whether that be a buy trade or a sell trade. So with that being the case, how is it that professional traders actually make money using technical analysis? You may think I'm about to say by combining it with fundamentals and news events. That's not it at all, for me at least. Other traders may do that, and that's completely fine. Personally, I rarely incorporate news events or fundamentals into my own trading. But here's the secret. What professional traders do, instead of just taking a look at random bits of technical analysis and trying to make a trading decision, is they combine a certain selection of technical factors that they have seen work over time. We call this a strategy. So they combine just a certain selection of technical factors. They only trade when those factors align, when that strategy aligns, and they accept the fact that they will have losses at times, but that over time, this certain selection of technical factors should provide them with an edge over the market, over a large sample size. So this way, instead of trading based on random bits of technical analysis, constantly pointing out different things, analyzing a chart, you're actually trading based on a system that you use every single time and that provides you with an edge over the market. And the way we accomplish this is by creating a rules-based strategy that we can follow. So keep in mind that technical analysis by itself is not going to benefit you very much in your trading until you combine a certain amount of technical factors into something called a strategy and you trade it consistently. Until that point, yes, it's great to learn technical analysis. You're going to need to know technical analysis in order to build a trading system, in order to build a strategy. But without a specific criteria that you look for, you're going to be completely confused, guessing on which direction to buy, and you're very unlikely to ever become a professional trader. So now that those 6 minutes are up, let's actually take a look at a rules-based strategy that has proven to give over a 65% win rate since the beginning of 2021. While I'm talking you through the rules of this strategy, I want you to keep in mind that all these rules is a combination of different technical factors that have proven to give an edge over the market. So the first thing we're going to do is I'm just going to draw out this strategy on the chart so that it can be super simple. Then we'll actually hop over to some real charts on some data and take a look at some real examples of this specific strategy. Let's go ahead and draw it out now. The first thing you're going to need to plot on the chart is going to be the 50 EMA. That is a 50 period exponential moving average. Once you have that on the chart, I'm going to draw it out here. The next thing we need is just price. So let me go ahead and draw out price and then I'll talk you through all the rules. When price is pushing lower, what we want to see is the initial point where price breaks above the 50 EMA and stays above the 50 EMA. Once we start closing above the 50 EMA is when we're going to start looking for the other rules of this strategy. But rule number one is we want to see price close above the 50 EMA. Now, what this is going to do is give us a rule we can use to spot potential reversals. This strategy combines reversals and breakouts in order to try to capture big moves out of price. So in this case, we have our break above, rule number one met, break above the 50 EMA. We're then going to be waiting for a pullback. Now I identify a pullback as at least two opposite colored candles coming down. So in this case, looking for a bullish trade, that would be at least two, it can be more than two, but at least two red candles pulling back. At the point that I have at least two red candles pulling back, I'm going to put a horizontal line at the body of the swing high candle. So that would be the highest high price made before the pullback would be the swing high, and I'm putting a horizontal line at the body of that candle. Now, what I want to see is I want to see price then push up and eventually break above that high that I pointed out. I want to see it break above my horizontal line that's at the body of this previous swing high. When that happens, that is my entry. I need this breakout candle to be more than 2 pips above my horizontal line, just showing me that it's an actual potential breakout. And if that is the case, this is when I'm actually going to be pressing the buy button. Now, I'm going to be putting a list of these rules on the chart when we head over to some real charts and take a look at this strategy in action. But another minute rule that I have is that this pullback cannot close below the 50 EMA. So I need the pullback to stay above the 50 EMA as well. Again, those rules will be on the chart, but this essentially is a bullish example of this strategy. We're going to go over to some charts and I'm going to break it down once more on some real candles. So here's a complete list of the rules. Go ahead and screenshot this right now if you would like to, because I'm about to make it smaller just so it's not in the way. Okay, so for this strategy on the screen right now, there is an example of a valid trade using this strategy. I want you to see if you can point it out. Hopefully you were able to see this right here. We have price pushing and breaking above the 50 EMA. We have more than one candle in this pullback pushing down. What are we looking for then? As soon as I see that, I'm going to be putting a horizontal line on my chart. There's my horizontal line. I also have to make sure what? Rule number 3, that no candle closes below the 50 EMA. That rule is met as well. This candle is in fact closing above my horizontal line by 2 pips or more. So at that point, I can place my trade right here on this breakout candle. Now, another rule that I have here is the entry candle cannot be bigger than 1 times the ATR indicator. The ATR indicator is right up here. It's currently 31 pips. This indicator tells you the average of the last 14 candles. And what I want to make sure of, because of what I've seen in my testing in the past, the bigger this candle that breaks out, the less the likelihood of a continuation. So if I have a huge candle that breaks out that's more than 1 times this ATR indicator or bigger than average, then I don't want to place the trade and it's not valid. Those are just nuanced rules, and I'll explain those in just a second. But as we are right here, you can see that I have a stop loss rule that says it's 1 ATR below my entry candle. My entry candle ATR is 32 pips. So this would be a 32 pip stop loss below 34, which is 66. By the way, I got 34 by pulling down to the bottom of this candle. That's 34 pips. Now I have to add 32. And as you can see, my target for these trades at this moment is a 1.4 to 1 reward to risk ratio. This specific trade would have worked out very nicely, hitting targets right up there. So as you can see, a trading strategy is nothing more than a combination of different technical factors. In this case, we're utilizing a moving average and the break of that moving average to signify that we have a possible reversal. We're using our definition of a pullback in order to make sure we have a decent amount of selling pressure before a breakout. We're using a breakout for a possible entry. Now, I said nuanced rules. During the creation of a strategy, I could say that, yeah, I'm just looking for breakouts after price has pushed above the 50 EMA. But that's very vague. That's easy to mess up. We want to make our rules in our trading strategy as concrete as possible. So that's the reason for these nuance rules. In my testing of the Aussie yen with this strategy, I noticed that if this pullback pushes low enough to close, candles closing below this 50 EMA, made the strategy a lot less accurate. That's just some nuanced rules that you'll have to pay attention to in order to figure out what works best. I also noticed that if this candle is larger than 1 ATR, larger than that indicator, larger than the average candles around it, then it doesn't perform as well. And I noticed that if we have a break above my horizontal line that's less than 2 pips, then that doesn't work as well either. So those nuanced rules are things that you will find out while developing a system during your back testing process. And on the subject of back testing, that is how we actually figure out if a strategy is going to have an edge in the markets. As you can see, I have this list of rules right here. In order to back test, all I do is scroll the chart back, and you're going to see a lot of back testing lines on my chart when I do this. I just take those rules, I scroll the chart back, I start from an earlier date. In this case, it was all the way back in 2021. And I mark off every time those rules were met with either a winning trade or a losing trade. So if all of my rules were met for a bullish trade and the trade won, I mark it with a green line. If the trade lost, I marked it with a red line. That's the process of backtesting, and that's how you determine if a strategy or a system that you're developing is likely to be profitable in the future. And along with backtesting, you can also demo trade the system to see how likely it is to be profitable in real markets in the future as well. But with that said, just to make sure that you have a good understanding of this strategy itself, let's take a look at a bearish example of it right now. So tell me, on the chart right now, do you see an example of the trading strategy we've talked about in this video? A bearish example. I know we haven't talked about a bearish example yet, but it's literally the opposite of a bullish example. So the opposite of a buy trade would be a sell trade. And what we're looking at right here is prices have been trading above the 50 EMA. We then get what? We get the break of the 50 EMA. We get a pullback of way more than 2 green candles, which is what we need in a bearish example. We need more than 2 green candles on this pullback. The next rule is that a candle cannot close above the 50 EMA. I'll zoom in so this is clear. No candles closed above the 50 EMA in this case. So all of those rules are met. What do we do once we know those rules are met? I'm going to be putting a horizontal line at the bodies of the swing low. Once I have that plotted, things become very simple. I'm just waiting for price to push down and close below my horizontal line. This is going to be a breakout directly after a reversal to the downward direction, which is giving us pretty good odds of winning a trade. At this point, I'm going to go ahead and place the trade as long as what? What was one of the rules? As long as this candle is not larger than my ATR indicator, which is currently 31 pips. So as long as the body of this candle is less than 31 pips, which you can find out just by using the measuring tool. I'll measure it for you now. The body of this candle is 29 pips. Is 29 less than 31? We all know the answer to that. The answer is yes. So this is still a valid trade at the time that it breaks out. And with that being the case, stop loss above our entry candle. Target at about a 1.4 to 1. Reward to risk ratio is what I personally have been using for this strategy. And there you go, another example of this reversal breakout strategy. So here are the rules and results. Full disclaimer, I literally tested this strategy yesterday, and I'm gonna continue my testing and optimizing throughout the weekend, but 41 trades is not quite enough to say for a fact this is going to continue to be over 65% accurate. I like to have at least a 100 trade or more sample size before I say stuff like that. So full disclosure, this is only out of 41 trades, but out of these 41 trades, since the beginning of 2021, this strategy has won 28 trades, lost 13 trades, giving a 68.2% win rate. I'll scroll left so you can see all my lines. Don't know if that does anything. If you want to compare your own results or take a screenshot of this, whatever you want to do, if you want to count the lines yourself. But here's an example of a really simple rules-based strategy that just combines a number of different technical factors and that's proven to give an edge since 2021. This is the secret. Technical analysis alone is never going to make you a profitable trader if that's all you depend on. It's just, hey, I know technical analysis, so I'm going to be right. That's not how trading works. You're going to have to take out parts of technical analysis and combine them into a trading strategy that proves to give you an edge. Now, as I said, I just started testing this myself, and if you're in the university or the EAP, I'm actually going to be adding this. If it continues to test this well after I get it completely tested and optimized, this will be a new strategy in the course. For any of you that are interested, whenever I get strategies like this, I like to share them on YouTube, but at the same time, I optimize these for the best reward to risk ratio, for the best currency pairs to trade them on, for the best times of day to trade them. I do a lot of optimizing, and those optimized results is what I share inside of the university and inside of the EAP. If you're interested in either of those, then go ahead and click the link in the description. It's going to be the top link, or you can go to www.thetradingchannel.com. The EAP and the university are now essentially combined, so it's going to be the TTC Forex University, and again, it's the top link in the description if you're interested in learning more about that. If not, that's completely fine too. This is going to be your last chance to go ahead and screenshot the rules of this strategy if you'd like to. Again, please remember, this is a trap I fell into in the beginning of my trading career. Technical analysis by itself will not make you a profitable trader. Start working on and learning systems. Of course, you must learn technical analysis first, but after that, your journey is not over. After that, it's time to either develop or learn a trading system or strategy like the one you've learned here today in order to actually have an edge over the market. So with that said, I hope you enjoyed this video. If you did, go ahead and click that like button, subscribe. If you're new, go ahead and comment below if you made it to the end. I wish you all the best of luck on your future trades, and I'll talk to you in the next video. See you soon.